let's just quickly pull up the counter. I mean, no major moves coming in terms of PN Gadgil. And if you see in terms of the price to earnings as well, I think it's the third most expensive from the top 3 or 4. So you have Titan, which is almost trading at 88 times, Kalyan Jewelers, which is closer to that, around 79 to 80 times, and the PN Gadgil at around 36, 37 times. So the cheapest of the top 3, I would say, Neeraj, but the stock is seeing gains now of around 2.7% as we speak. But moving on, you have a Bharat Forge that is in focus in today's session, 3% downtick coming in on the counter. If you see in terms of the revenues, a dip of around 10 to 11% on that one. Margins have also seen a contraction this time around, and the profit number is down around 16 to 17%. What's interesting to note over here in terms of Bharat Forge is that there has been a slight bit of softness in the CV demand. The European operations were weak, and the defense revenue has been lower as well. And I think that's what the street is actually taking negatively. The other aspect, Neeraj, is the order win momentum. That has also decelerated in the third quarter. So 800 crores is what you've seen in the third quarter versus a 1200 crores in the second quarter. In fact, let's get in Amit Kalyani, Vice Chairman and Joint Managing Director at Bharat Forge. Amit, good morning, I beg your pardon, and welcome to the show. In terms of the numbers internally, have they met your internal expectations? Because clearly the street is not looking at it that positively, taking the downtick that we are seeing.
So there are two parts to our numbers. The in automotive numbers, I think, were a little lower than what we would have expected, also because of the cyclicality and overall softness in some of our end markets. I think the industrial numbers, which was our acquisition of JSA and the ramp up of that, was pretty satisfactory, and in fact is starting to do well and will continue growing quite fast. On the defense side, as we've always mentioned, the defense business is one that you should look at on a year-to-year basis, the full year basis. It's not a quarter-to-quarter business. Also, the point you mentioned about order intake, this is the quarter where everybody has year ends happening. So in the year-end quarter, typically no major decisions on sourcing, etc., are done. Also, there are inventory corrections that happen at everybody's ends. Notwithstanding all that, I think we are fairly sanguine, and we are very, let's say, clear about what we need to do, as we've mentioned in the analyst update as well, that this year will be flattish on the market side, but we expect to see growth coming from our industrial sector, coming from some of the new products that we are launching, and also our defense business will continue growing.
Okay. Amit, good morning, Neeraj here.
Hi, Neeraj.
And just love to understand, I'll have a few questions on announcements, more importantly than just the numbers too. But a follow-up here, if FY25 turns out to be a flattish year, are you more constructive about what could happen in FY26? One, because of a base effect. Two, because business clarity might just come in. Trump presidencies just begin. Maybe clients will take some time to make decisions. Maybe February or March is that month. The CV cycle seems to be looking okay. Maybe in the US too, it might look okay. Just trying to understand how you gauge the slightly longer term picture.
Yeah, you're absolutely right, Neeraj. The CV cycle, first, let's talk about it. It's clear that the Indian economy has to start growing at a faster pace. And as and when that happens and the signs of that start being seen, you will see the CV sector grow quite rapidly. Typically, the multiplier is anywhere between 1.5 to 1.75 of the GDP growth. Sometimes it can be even higher depending on the age of the fleet. Secondly, in the US, the whole talk of Rebuild America, setting up and increasing the power capacity, power generation capacity, rebuilding a lot of the infrastructure that has become old, as I mentioned before, is all very, very conducive and directly having an impact on the construction and transportation sector. So those are sectors that we have a lot of business in, and that should see growth. Plus, there is emission norms changing in 27. Now, again, emission norms and what happens with them remain to be seen with the new government, but otherwise that would have meant that in 26 there would be a pre-buy.
Okay, okay, fair call. Now, the question that I would have is that I'm just on results. One more question, Amit, and that is around the cost of raw material. Now, it's a bit unclear as of now to us sitting out here because China is doing its bit. At the same time, don't quite know how much of a stimulus does it give and what resultant impact it has on commodity prices by and large. And supply chains, I believe the issues would have gotten sorted by and large, but again, don't have a clear handle there. Any thoughts on both of those?
You know, commodity prices also will be impacted by, political decisions. Right now, commodity prices are softening because of overall demand going down, and the European economy is being a little slower and cooler than others. But again, I think we have to wait and watch. But I think fundamentally, commodity prices going up for the company directly, we have a pass through, so it doesn't impact us directly.
Okay, Amit, now a few announcements or a few points. I mean, some people have picked it up on the, people picked up hints as I read of restructuring at overseas subsidiaries on the con call. Now, I don't know if you actually explicitly said that, or did you actually give a hint, or people just picked it up, but would just love to know, how are you thinking about that
so look,
piece?
it's very clear, there is a fundamental shift in the overall, manufacturing, let's say, ecosystem and manufacturing requirements in Europe. We are seeing, major customers also cutting down capacities. Many customers are also restructuring their own plans of what they want to make, what they don't want to make. So what we have said is that, we are not happy with the performance of our subsidiaries in Europe, and we are going to take 6 months to decide, after talking to all our customers, what is our strategy going forward. Within 6 months, we'll have a concrete plan, which we will then elaborate and obviously implement.
So, Amit, a follow-up on that one is, if you're going to review the manufacturing part of it in the overseas business, yes, the weakness in Europe, the demand slowdown probably in North America, how is it going to impact your financials? What are you penciling in right now?
So look, yes, as we mentioned on the investor call, I don't think the impact is going to be worse than what we've had this quarter. And secondly, please remember that at least we have a global footprint, and we have strength of balance sheet and wherewithal to manage this, and also work on reducing costs and improve the performance of our subsidiaries no matter what. We have a lot of European manufacturing that cannot operate profitably below 80-85% of capacity utilization, because their break-even levels are high, their structural costs are high, and there's clearly going to be opportunity to move business from other geographies into India. For a long time it was China, then it became Vietnam. I think it's now India's turn. India and Indian manufacturing is becoming evident, the advantages of that. And I think that there is opportunities in the medium to longer term to substantially accelerate the growth of our business out of India.
Okay, just wondering, Amit, a follow-up on there. Would it need some aid from the central and state governments, or would you believe now businesses would be primed to bag that share that you spoke about?
See, I think the help that you need is policy and policy implementation in a time-bound manner. And second, if there are strategic sectors that the government wants private sector to get into, there needs to be a long-term approach, and sometimes there needs to be hand-holding. I mean, if you look at the semiconductor sector, the battery sector, clearly those are sectors which are critical to India, and the government has had to, provide a structural solution to make them competitive. But those are very long gestation businesses. We are not talking about anything like that. We're talking about businesses where, once you invest, within 3 years, you start generating, returns, but sometimes even 2 years. One of the points, I don't know if you captured, was that we are investing in new capacities to make new products for aerospace. And this will be a significant growth driver for our aerospace business. And we believe that with the customer tie-ups we have and the overall growth of the um, aerospace industry, and especially the demand growth coming from uh, India and Asia, the supply chain and the value chain also has to move into this part of the world. So we've had two large announcements on aerospace, one on defense, and I think those are all going to be massive growth drivers. And for example, the landing gear line, we are increasing our capacity and doing more value addition for products that we're already supplying. So it's moving from one stage to significantly higher value add.
Got it. Actually,
And aerospace, as I mentioned on the call, is that we expect to see our quarterly numbers cross, 100 crores this year and grow substantially from there. So we expect to see, 30, 40, 50% growth YOY in this business from FY25-26.
yeah, it's going to be my next question. The partnership with, I believe you pronounce it as what, Liebherr?
Liebherr.
Liebherr. Okay, yeah. So I was going to ask you about that as well because it's standing out there. So, yeah, can you talk a bit about that? Is that
so this
a
is
part
a
of this thing?
which we have been working with for quite some time. It's a family-owned European company, very strong, very long history, and great set of products and sectors that they operate in. One of which is aerospace, and they clearly see that for the single-aisle aircraft, the volumes are growing to a point where it has to move from one at a time kind of manufacturing to a significantly accelerated manufacturing process, because volumes are significantly growing, and especially Airbus has grown its single aisle volume very, very dramatically. And especially the orders that they have also received in India. So the future demand for these products is also going to be here.
Right. So that's with regards to the demand on the current products. But Amit, in terms of the defense portfolio, from what I read was that you've gone ahead and lowered your guidance with regards to the top line expectation versus a revenue expectation of around 50% in FY25. Correct me if I'm wrong, and this is the group defense business. What is the outlook looking like, number one? And two, what is the executionable order book that you're sitting on?
Second question, our executable order book currently without ATAGs is about close to 5,700 crores. One of the things in the defense business is that the business doesn't go away. It just takes a little more time. So what we had thought will happen in Q3 and Q4 will spill over into a little bit of next year. But, I don't think the business is going anywhere. It's just delays in orders coming in. We have a lot of new products that we are also launching, and we will announce at IDEX significant new exciting programs. So, in defense, what you're saying technically is right. It's not so much a guidance reduction as in, the execution being, let's say the order intake on the whole processing moving from one quarter to another. But once the orders come in, we are able to accelerate deliveries as we have shown in the past, because we have a fairly large capacity. So, as soon as we get our orders, we can start implementing them very quickly.
And very quickly on the ATAG orders that you have, and I think your L1, what is the potential timeline that you're looking at in terms of the contract to be signed and in terms of it actually reflecting on your revenues? What's the execution timeline for that?
So look, the order signing is expected by everyone to happen in this financial year, which means before March. March, maybe it'll spill over into April, but the process is that once we get the order signed, within 6 months we will have our FOPM done. Then you have some validation, and then within a year you can start deliveries. And I think we have a fairly significant ramp up of delivery that we can do. I just read a point on the ticker which said that a lot of our European arms cannot operate below 80 to 85% utilization. That wasn't what I meant. What I meant was that most supply companies which are in the sectors like ours, which are in forging, casting, etc., small and medium companies cannot typically operate profitably below 80-85% capacity utilization because of high break-even levels.
Amit, thanks for pointing that out. We'll get that changed as well. I have one last question, Amit, before we thank you. A brokerage house which is looked at your numbers slightly not as sanguinely is saying that the European woes have driven the Q3 miss and the outlook not looking good as yet. A house which is looking at you slightly more convincingly saying that they are bullish on the uptick in the US Class 8 cycle coupled with strong growth in the non-auto business verticals. You personally, are you in the near term, long term we know it's very constructive, in the near term, what is the bias towards? Strong growth in non-auto and Class 8 truck sales, or Europe has a bit of an issue which you need to resolve first?
So I think the Class 8 and the non-auto will grow very fast. And Europe, the jury is out. I think Europe needs to get through its elections and then chart the direction that they're going into. But notwithstanding that, I think, Neeraj, what we have said on Europe is give us 6 months and we will have a concrete decision. The bottom line is that we will fix this business once and for all.
Once and for
Either
all.
way. So I think that I would tend to be more, I would say, bullish rather than bearish.
Well noted. Well, looking forward to more conversations. Amit Kalyani, thank you so much for taking the time out and speaking with us.
Thanks, Neeraj. Take care. Bye-bye.
That's Bharat Forge for you. More constructive. And while this the stock is down about 3%, it's off the lows of the day.